Hey everyone, and welcome back to another video for today. In today's video, it's a first of its kind, I believe, because I don't think I've ever covered a company with a market cap of under $100 million. Now, I don't usually do this, but of course, when you start looking at such companies, the reward is extremely big if it works out. But the risk is there as well. The risk is there that your investment goes to zero, or at least, you lose the majority of it before you notice that, things will not work out. Now, I made a community post and you all responded with plenty of ideas. I've made the list. I'm going to look at companies that are interesting to me, and we'll start covering companies that, are not multi-billion-dollar companies already today. So, now in today's video, I do want to touch on a company that, if you're a parent, you might have one of their products, and that company is called Owlet. Now, Owlet has a market cap of $52.2 million. Year to date, the stock is down 21%, but as you can see right here, in the last 3 years, stock is down 93%. Yes, this is a stock that went public through a SPAC, so just like 90% of the SPACs back in 2021, 2022, it got completely destroyed. But that does not mean that the business is bad right now. Actually, today, the business looks much better than before. And of course, since we're down so much, since the market cap is just $52 million, we have an EV to sales ratio in the next 12 months of 0.8 times. And as you can see from the analyst estimates, they expect sales to increase 38.5% in fiscal year 2024, another 31.4% in fiscal year 2025, and then close to another 35% in fiscal year 2026, with EPS, that's non-GAAP, turning positive. Now, for those that don't know what the company does, it's pretty simple. This is the products that they're selling. Basically, one, a dream sock, which is this one right here, the first of its kind FDA cleared baby monitor. Then you've got a camera. Basically, you put a camera in your kid's room above where they're sleeping. You can then see if the baby is awake or not. If there's something hindering the baby through the app on your phone. And then you've got BabySat. That's the hospital grade monitoring for your home. And this, you will need a prescription. Now, why is this so interesting, other than the fact that I've seen this product at my siblings as well? Well, it's interesting because most families have kids, right? And most families will continue to have kids in the future. And to be honest, when you have a kid, a baby in this case, you will not think twice to spend money for one, yourself to be able to sleep better and know that your kid is sleeping well, is safe. And two, for the safety and security of that baby. You will not think twice about spending $100, $200, or even $5 a month, a subscription service that they're launching as well, which will of course increase the LTV, the long-term value of a customer. You will not think twice, right? If you're a parent, you can tell me in the comment section below if I'm completely wacko here. And so they did a little study here. They found the following. Parents rely on technology to help alleviate their anxiety. Nearly 3 out of 4 parents feel technology that helps them monitor their baby has made them feel less stressed and anxious. 50% of parents want a monitor that helps them understand if and when they need to seek medical attention when their baby is sick. When their babies are sick, nearly a quarter of parents wish they had medical-grade health monitoring technology at home. By the way, since 2012, over 2 million parents worldwide have used Owlet's platform, contributing to one of the largest collections of customer infant health and sleep data. They continue. The link between exhaustion, anxiety, and parents' mental health. The survey reveals that exhaustion, 61%, is the most common emotion parents experience during the first year, followed by feeling overwhelmed, 48%, and anxious, 32%. This is compounded by 86% of parents waking up as many as 8 times a night to check on their baby. A lack of restless sleep driven by these worries continues to affect parents' mental health. When asked what would benefit their mental health, but is the hardest to find, these parents answered. 1. More sleep, 54% answered that. 43% answered time for self-care activities or hobbies, 39% answered assistance for household chores or responsibilities, and 32% said more support from family, friends, or partner. Now, 96% of Owlet parents surveyed have reported more peace of mind, and 94% have reported better quality of sleep. Again, if you're a parent, if you've used Owlet or a competing product, let me know down in the comment section below if you think this is true or false. Now, turning to the financials and the most recent quarter. So Owlet's results in the first half of 2024 give us added confidence that this year is a turning point for our company. We have delivered strong double-digit revenue and sell-through growth as we advance our vision to make Owlet the most trusted infant health monitoring ecosystem. Along with our excellent commercial progress, we have continued to streamline our business to achieve improved gross margins and significantly lower operating expenses, which in turn drove improved adjusted EBITDA and a clear path to adjusted EBITDA break-even exiting 2024. While pleased with our advancement across our business, we are not resting and plan to continually lay the regulatory groundwork for additional commercial expansion in both our home US market and abroad. A prime example of this comes on the heels of our groundbreaking FDA clearances in 2023. During the quarter, we announced medical certification and product introductions in both the UK and EU markets. In short, we have dramatically expanded our market access at a time when we have resumed our top-line growth trajectory. Further, we kicked off Q3 with record-breaking results for Prime Day on both Amazon and OWLTcare.com. We see Owlet as being well-positioned for long-term success, and I'm excited to lead our dynamic company into the next phase of its growth. And these were basically the numbers for Q2. Revenue was approximately $20.7 million, up 58% year over year. Gross margin was approximately 50%, that's up 1,000 basis points year over year. Net loss was $1.1 million, improving approximately 85% compared to a net loss of approximately 8.5% the same quarter last year. Adjusted EBITDA was approximately $100,000 compared to adjusted EBITDA loss of $4.3 million. So definitely some improvements from a profitability standpoint, and we're also seeing further top-line growth. As for the second half of 2024, they're estimating net revenue to be in the range of $37 to $42 million, gross margin of 46 to 50%, and adjusted EBITDA loss of $3 million to break even. For the fiscal 2024, they're estimating net revenue to be in the range of $72.5 to $77.5 million, gross margins of between 47 to 49%, and adjusted EBITDA loss between $6 to $3 million. Now, this is basically their market opportunity, the total addressable market as of now, plus what will happen in the future. So you first have $1.4 billion in smart monitors. That's the estimated spend on smart baby monitors back in 2023. Then if you expand in healthcare, you are at $4.1 billion. Then if you put on top of that health data and services, so here they're talking about Owlet's ecosystem of products, a new $6 per month subscription service times 9 million babies in current countries, 5 years per baby, you get $8.3 billion. That's Owlet total addressable market in the current markets with medical clearance. Now, what's the strategy here? Well, again, you've got the three aspects here. So one, you've got the Dream Sock. That's consumer adoption. The MSRP on that is $458 with a 50% gross margin and $458 in LTV potential. You can see those products on their own website, Walmart, Target, Best Buy, and Amazon. And Amazon is also an early backer of that company. Then you can add a BabySat, that's in the healthcare expansion MSRP for that. It's $600 or $599 with a 65% gross margin. And here, of course, the LTV goes up. And they started working with insurance companies as well. So instead of it just being out of pocket, it's quite expensive. If you've got agreements with insurance, then of course it will cost you less. And then they're adding subscription services, $599 per month, 90% gross margin, and here the LTV potential is now at $918. Now, all that is great, right? We've seen that the expected revenue for the year is what, $75 million, while the market cap for the company is closer to $60 million. It's expected to grow fast, expected to become more profitable as well, expanding in other markets. So that's great. The issue is, of course, still is dilution. And well, if you look here at the capitalization summary, if you look at the cap table, you see here warrants. Warrants are quite high. Now, the potential exercise of these warrants could lead to further dilution and downward pressure on the stock price. But as we've seen in more recent quarters, that could also result in net gains for the company, but those are not real cash gains, so to speak. So yeah, my point here, expect further dilution. If we look here all the way back to Q3 2021, shares outstanding have gone up by close to 13%. Now, there are competitors out there, of course. You've got Chinese knockoff versions of those cameras. I mean, I'm pretty sure that if you're a parent and you're watching this, there's a high probability that you've bought from one of those brands. But there is also another quality brand, which is called Nanit. Nanit is pretty popular, pretty good service as well, good quality. You see here the reviews on Amazon as well. The thing with Owlet is that every time I look at the 1-star review, as you can see, there are 4.2 stars on Amazon, whereas Nanit is at 4.5. They both have around 2,300 reviews there, but Owlet is Amazon's choice. I mean, not surprised, to be honest. But the problem that I'm having here is that most, if not all, the 1-star reviews that I've seen are all about the connection issues between the Wi-Fi, the monitor, and your phone, and sometimes the quality of the camera as well. Now, of course, there is an updated camera, etc., so maybe that might be better. But yeah, the 1-star review is something to keep an eye on, especially if you go on their website. The company doesn't really address it. You see countless of bad reviews because of the connection issues, the setup is a problem. And all the answers were, oh, for some further feedback, send us a message at this email, etc., etc., instead of actually answering the issue. So yeah, that's a thing that annoyed me a little bit. Plus, I mean, this is a very popular brand. As you can see, followers on Instagram, close to 460,000. I think overall, they've got over 1 million on all social media platforms. So it's a pretty popular brand for parents. I mean, word of mouth here is huge for them. And it shows. It shows, I mean, revenue is starting to reaccelerate right now, as you can see right here. It's expected to be free cash flow positive next fiscal year and then grow quite quickly in fiscal 2026. Then looking at gross profit margin and operating margin, we can see that it probably bottomed here in Q3 of 2022. Since then, we've seen, well, operating margin improve, still negative, gross profit margin improve as well from 25.5% to now 45.7%, and gross profit is recovering quite nicely as well, of course, far away from the pandemic era. Now, looking at the stock right now, we're at $4.14. Yes, it does seem like we did get a rejection for this week at the 20 and the 50-day moving average. Previously, the stock got rejected on the weekly here at the 200-day moving average back in June and in August as well. Now, the stock is making higher lows, as you can see, for the last couple of months here. So that's quite bullish. But yeah, every time they're going to dilute shareholders, it's going to put pressure on the stock, as we've seen, I think back in early September, we've seen that happen. So that's this red candle right here. But overall, my thesis for this is hated, forgotten company and stock, very low market cap, high market cap potential if they can execute well, continue to grow sales, increase, expand internationally, become more and more profitable, and then eventually get maybe a higher multiple. And that's when I will probably exit. Will it be a 10x opportunity? Remains to be seen. For it to 10x means a market cap of $600 million. Could it happen? Could definitely happen. Could also be bought out. Remember, Amazon bought Ring, also camera. So it is in their ballpark. Amazon is an early backer of this company. I'm not saying they're going to buy it for $1 billion, but there is potential for a buyout. So yeah, that's basically the first view of Owlet. Now, me personally, full disclaimer, I already have a tiny position, around $1,000 worth of position in Owlet. Let's see if it works out. Of course, this is not, oh, I put 1,000. If it 10x, it's 10,000. It's great, But of course, I will increase my position in due time. So that's it for me. If you enjoy this type of videos, let me know down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye bye.